Yeah, hello and welcome back. This is now part 13 of the inheritance text lecture. And, well, the number 13 promises bad luck or at least something extraordinary, which probably provokes criticism. Or is it critique? I don't know the right word. Because this will be now some short remarks on where the inheritance tax, at least in Germany, has some issues, and I will remind you of a few reform ideas or of the basic outline how things could be reformed. Well, this is now the last part of chapter 2. So here we are, it's Reform Ideas 210. And the problem is the inheritance tax in Germany has more and more been reduced to a kind of a ridiculous construct. More and more has been carved out, exempted from the tax, so that less and less of the tax base remains, and that the tax becomes more and more unfair and unjust, so that more and more people have more and more right to complain about the existence of such a tax. Now, as you probably know from the basics, it is a straight way to a fundamental injustice if you leave wealth as such completely untaxed. My extreme example, and you can usually illustrate the effects of if you abolish a tax or if you have it in the best way by extreme examples. My best example is, please imagine that after a long period of years, the old Scrooge McDuck finally dies, and that his son and, no, his nephew and, well, favorite nephew and designated heir, Donald Duck, finally takes over the ownership of the vastest fortune on earth. Now, Donald Duck is famous for not being able to earn money. Everything he does ends with a fit of bad luck, so there will be losses and no income tax anymore if Donald Duck takes over. Now, imagine that Donald Duck takes over the old butler who served Scrooge McDuck for centuries, nearly for centuries. That butler has been trained to use a tea bag for a whole week. So the consume expenses of Donald Duck will also be ridiculously low. So there will also be no consume tax coming in. And that would mean that the richest guy in the whole Duckburg, in German Entenhausen, will never pay an appropriate amount of tax or even no tax at all. So that the policeman, the butler, and several other people working in the money bin of now the new owner Donald Duck will pay far higher taxes than the richest guy in town, and this can't be. So there must be a tax on wealth. Now, a regular wealth tax annually makes no sense because the bureaucratic efforts, the bureaucratic burden is so expensive that it does not justify or that it is not justified in relation to what you can demand annually as a wealth tax. So we need an inheritance tax. Now, what here, especially in Germany, has happened is more and more people come and complain, hey, if I have to pay an inheritance tax, then I have to give away father's Picasso painting. Or, well, then I have to give away a bit of the business or some of the shares. Or, well, that is the very nature of a tax on wealth, that you have to part with a part of your wealth. Otherwise, the whole tax is senseless. Then it would be a tax on income or a tax on consume. But we said wealth justifies a tax. So you should share your wealth, not in an amount which is so high that nobody is ever motivated to accumulate wealth anymore. That is why an inheritance tax was so favorable. Now, the Germans always said, well, that hurts somebody's feelings. I can understand that it's hard to part with the money. Yes, but for the previous owner, it was even hard to part with life. So a tax is always hard. So that cannot be a justification. It should be, if so, an additional, special, peculiar hardship, which goes over all other hardships, but that you have to sell off a bit of the things which you inherited cannot be a justification to skip the whole tax. And now the thing is, in the end, the tax base is carved out more and more. And that happens in a rather arbitrary way, although there is a financial capability to pay. More and more people are let off the hook just because we can understand their feelings or they bring forward economic needs, problems for the further upkeeping of the business and so on. All that are taken in itself convincing reasons, but then in the end, nothing of justice and fairness remains. And so we have exemptions for business property, we have exemptions for family houses passed over to children because children should not be forced to sell their parents' houses, and so on. We have high personal allowances where nearly nobody in the average population ever pays an inheritance tax. Is that really just and fair if you compare the children of a poor family where the parents invested everything which they had as monetary surplus into the education, studies, or what else, professional training of their children? So where they die relatively poor, or where others passed on, let's say, 200,000. In the present system, both pay no inheritance tax. Is that just and fair? That is questionable. So you have high personal allowances, and in the end, only a few remaining people who have bad luck to inherit the wrong things pay the tax. That is the present state of things in Germany, and that is nothing which really convinces me, and it should not convince you either. The motive now for all these exemptions is we do not want to force the heirs to sell the property. And I told you just now, this is a fundamental contradiction to the basic concept of the tax. If you tax wealth, it is natural that you have to sell a bit of the wealth because you shall give a bit of your wealth away. So that can't be an argument. Now, the other argument is it creates economic problems. But if you take a more closer look at the problem, you see that the problem actually is not the tax as such, but that you have to pay it without having the necessary liquidity to pay for it, and the fact that it hits you mostly unforeseen with a huge amount of money. For example, with the Cook family situation, they knew there will be a year when we have to pay, let's say, 30% of the equity. This is a drain and a negative impact on the equity, which probably nobody can survive. This is such a hard hit. Why? Well, they are not allowed to pay it off in installments. They just have to pay it at shortest notice, and that is what kills you. So let us focus a bit on that aspect. If it is really the liquidity aspect which makes the tax problematic under economic aspects, then you see the tax isn't the problem. And now let's say, so ignore the tax burden when you try to reform the tax. Look for the problem. It's not the tax, but the fact that you have to pay the tax so quickly and in one single amount. That is what is the economic negative impact. That is what kills off a firm. And now, if the real problem is the liquidity, then any reform idea or attempt to help the people should begin at that point, which is really the problem. So reform ideas should address the liquidity rules, so the due dates, the payment modalities for the tax, and not the tax burden itself. So one should renounce on exemptions and no longer exempt more and more assets from the tax, because that ends in a completely arbitrary, unequal treatment of property having the same value. The one is exempted, the other not. There are the lucky ones in the population and the unlucky ones. More and more pressure from that aspect comes from the Constitutional Court, and this is justified. So if you ignore that and say, no, exemptions are not justified, which is correct, then you should address and develop a liquidity solution. So you should reform the payment modalities, and you should reform them in general. So no applications for a postponement of due dates for the tax if the fiscal authorities think this is justified in your case, because then they will try to prove that it's not justified in other cases, and then you have again that unforeseeable risk that you might be forced to pay everything. Then you will again apply for the exemptions, and you will be right so. So the only solution, if you develop one, should be one which addresses the liquidity problem in general. So you need a general rule which says the due date for the tax is always designed in a way which can never which can never bring anybody into problems too much. And now, how could that be done? How can you arrange the payment modalities in a way that everybody can survive that? The 30% taxpayer as equally as the 50% taxpayer. The answer is so plain and simple that it surprises you. You might levy the tax on everything, apart from these things where simplification itself requires an exemption, like the birthday present or the Christmas presents and the pocket money which you give to children and such things. But then you should regulate that the payment modalities say, irrespective of how high your tax is, everybody can pay in small installments. And small, ladies and gentlemen, is then really meant to be small, so that you fix the annual installment for such an inheritance tax at a level which could also be justified in case of or survivable in case of a wealth tax. For example, if you fix the maximum installment at 1% of the tax rate, or 4 times 0.25% a year, so each quarter 0.25% of the tax base are paid off. Now that would be nice, because then you could still tax different people in different ways. You could still say if one is a closer family member inherits, let's say, 100,000 or let's say 600,000 taxable property, then the tax tariff of today would say 7%. Well, that would be okay. But then the payment modalities would be, okay, give us 1% of 600,000 each year. That is 6,000 per year. And that could be manageable and should be manageable with a property which has a market value of 600,000. If you are really not able to organize a credit, if you can give collaterals having a value of 600,000, if you cannot manage to take up a credit and pay off 7 installments of 6,000 at the low interest rates of today, then you are not worth, you do not deserve that property, to put it clear and brutally. On the other hand, if you are a complete stranger, not a family member, and just by a series of good luck, you became the sole heir of somebody who passed you on 100 million. So that under tax clause 3, you would be charged with 50% tax rate. Okay? You would be charged with 1% and you would pay it off over the next 50 years. But on the other hand, you would swim in money for the next 50 years, although it came from a complete stranger. You can probably still go on wondering why luck was so good for you, why life spoiled you so much. You can really be happy for the rest of, or for the whole 50 years that you had such good luck. And if you then pay constantly 1% and enjoy 100 million, although others never had that happy luck, congratulations, you would be able to survive that with a smile, probably, or with a certain feeling of pride. Yes, fate was very good to me, but on the other hand, I constantly pay a bit more than other people who worked for this property and achieved everything out of their own performance and with their own personal work, so who worked themselves up and earned these 100 million themselves. So that makes a difference. Let's admit it. And that 1% should be a decent form to honor that difference in good and bad luck of people. Well, you could still do this, but the thing is, the 1% would never financially kill you. That's manageable. And even more, this concept would render the tax burden from inheritance tax even into something which can be planned and where you can take precautions for. Because if you have, or if you work in the financial department of a firm where the sole proprietor is 75, then it takes you not much imagination to say, okay, during the next 5, 10, or 15 years, there will come the moment when a 1% additional burden on equity will be triggered. Okay, perhaps we are lucky and it doesn't happen tomorrow, but it might happen tomorrow. So now my question, do you think it's possible that a firm with a good ranking, financially solid, can make a preparatory agreement with the bank that in the case of cases where something human happens, the bank is going to give you the credit line which you need to finance the additional 1% per year? Or is it possible for such a firm to pre-arrange its situation in a way that with a short notice, they will be able to organize an additional 0.25%, a fixed amount calculated on the equity on a given point of time for the next years? And the answer is yes. I think every firm in the world which is properly managed should be able to take precautions for such a limited additional expense. Otherwise, you will probably quickly go under in competition. So this would then be plannable and foreseeable. Furthermore, the last special constellation, which I mentioned to you in the last video, that was that tragic coincidence that in a family, grandfather, grandmother, father, mother, child, no, child not, but 5 people or 4 people die in short sequence, one after another. And everything triggers a full inheritance tax. That ruins everybody. And here we had to again the need for an arbitrary solution. Now, what if you say no, inheritance tax is always limited to at least, and at maximum. 1% of the property inherited per year. So now you would say, okay, then that would mean that if four people die one after another, that probably the percentages add up. And here my solution would be, okay, don't be too greedy on the wrong spot. My suggestion would be that if somebody inherited a property and then that person dies, that those percentages of the inheritance burden which were not yet due die with that person. This would even so the tax would never accumulate, and that would also bring a bit more justice and fairness into the tax, because if you say a first person inherits a property of 100 million, oh, congratulations. Now that triggers a tax of, let's say, 50%. Well, then you have to pay off 1% year by year in my reform model. Now, if the rest of the debt is extinguished by your death, and you are inherit at the age of 60, then you know you will have to pay 1% per year till you die, not beyond your death. Now imagine there might be the tragic consequence that you die after 1 year. First example here. Okay, then it's 1% and then it's finished. Now there might be somebody else who inherits also at 60, no, who inherits perhaps with the age of 20 and enjoy the 100 million for the rest of his life. Let's say 70 years are still to come. This person then is forced to pay off 1%, 1 year after year, the full 50 years, which are calculated by the law. And now, well, these two really have a difference. The one could enjoy the 100 million for just 1 year and then went into the coffin. And the other one inherited 100 million for years and years and years, apart from the cases when he or she wasted the money, but then you still live from the memories. So I see these two people have really drawn different advantages from that money. The one had the fund for 1 year, the other one had the fund for 50 years. In the present inheritance tax system, both are plundered with 50%, and then that's it. Then the first one has just bad luck and the second one can be happy. In the 1% per year model, the difference would be equalized a bit. The one guy who is bad off and dies after a year pays 1% and that's it. And then the next generation inherits. The inheritance tax is newly calculated on the actual market value of the property inherited at the new date. Another period starts, 1% is paid off year by year until also these heirs die. So that would be just and fair. It would increase fairness instead of reducing it. And this would, in a certain way, combine the character of an annual wealth tax. You have an affordable, limited, tolerable, plannable amount of money which you can pay year after year. With the advantages of an inheritance tax, you have only once the bureaucracy to measure the property, and then you can collect huge amounts of money. And the disadvantages of an inheritance tax would be avoided in that small installments model, because you would never be forced quickly to sell off your property. So to low base prices or so. You could imagine really you inherit a Rembrandt painting and some other paintings, and you also have a good job, then you can try to pay off the installments from the money from your regular income, or you can look for additional sources for money. You have enough time, probably. You will never be forced to sell off property too quick and so under pressure so that you cannot get the fair value. You can even in patience select if you need to sell something, what you want to sell, if you want to take up a credit, and so on. As I said, I can't imagine a bank, if you can give them a collateral having a value of, let's say, 10 million euro, a Rembrandt painting, that they would not be willing to give you a credit of 100,000 for the first year, as long as you do not have the money to pay the first installment. Probably absolutely ridiculous, the idea. So many of the problems of inheritance tax would vanish. Even the impact for businesses would be controllable, would be limited, and so on. So this is what I recommend to you, to keep that in mind. From my perspective, that would be a good idea to solve the problems. And you should also notice that, as far as I know, in the political debate, such a reform model never was proposed. These people are so focused on fighting for exemptions for the groups for which they are lobbying that they do not care about justice and fairness. And the only thing which the Constitutional Court, which tries to cut that back, does is they always only think about, well, there must be an exemption or there must be not. They do not think of the liquidity aspect, probably because the payment modalities are always regulated in the closing sections of a tax act where nobody ever looks in. So that is what you could perhaps memorize and bring forward in debates. Well, what are we going to do in the rest of this lecture? Cases will come which allow you to exercise how cases in German inheritance tax can be solved. Then there will be a part about the genuinely international cases and how double taxation is avoided, either by unilateral rules, credit method, or by the rules laid down in tax treaties. That was what I had to say today. And thanks and goodbye. Enjoy a small little break till we see each other again.